In this session, I'm going to explain about technical analysis. Technical analysis is nothing but just like a tool which we're going to use in stock market to predict the stocks. Technical analysis is all about study of chart. Please look at this chart. By looking at this chart, you come to know what is happening in this company. How low the stock prices went, how high the stock prices went. Everything you can see in this chart itself. So you can come to know the overall performance of the company by looking at this chart only. So this chart is giving us all details about the past price action. By looking at this past, we're going to predict the future. Technical analysis is a powerful calculation. Each and every logic behind the technical analysis is having calculation behind. Using technical analysis, you can't predict what's going to happen next, but whatever happens, you can keep on earning because we're going to make each and every trade based on the plans. So whatever way the stock price is moving, you can keep on earning profit just based on the plans. Using technical analysis, you can't predict. You can predict any stocks, options, futures, commodity, currency, etc. If you understand technical analysis completely, you no need to pay anyone anything, you no need to join any services, you can trade yourself and you can make profits. Because lot of analysts saying like I'm an analyst, but if you ask what they know, they will say I know technical analysis. So if you understand this technical analysis, you can predict stock by yourself. You no need to join anyone. 90% of traders all over the world is using technical analysis. Not only in India, you can take even in Japan, America and China. Lot of traders are trading stocks based on the technical analysis only. A man understand the technical analysis by himself and later he created your own software and he sold that software to JP Morgan. So based on this fact, you come to know the power of technical analysis. Even JP Morgan is buying a software from the person who made the software using technical analysis. So if you understand this technical analysis completely, you can predict stock by yourself and you can make profits. The major part in technical analysis is support and resistance. Support and resistance is the art of technical analysis, which means if you understand the support and resistance clearly, you can make trade with 90% of success rate. The support and resistance will give you 90% of accuracy. And you can predict any stock perfectly by using the support and resistance. And in simple, we can say all the stock will work based on the support and resistance only. Why? Because millions of the traders around the world are using support and resistance. Let's see about support and resistance. Support and resistance is playing a major role in stock market. You can see most of the traders are using support and resistance to predict the stocks. Support and resistance not only help us to predict the stocks, but also it's going to help us in predicting the index, future and options, currency, and then commodity. So let's see the support and resistance with example. Before that, let's understand what is support and what is resistance. Support is nothing but here we're going to fix our stop loss, and resistance is nothing but here we're going to fix our target. So before seeing this both with example, let's see what is stop loss. Let's see about stop loss. The stop loss not going to stop us from loss, but it's going to stop us from big loss. Let's see with example. I am buying a stock called Aban at rupees 50 and I am fixing target at rupees 60. After I am buying, if my stock is keep going up, it went from 50 to 51 and then 53 and suddenly it went to rupees 60. This will be my happy path as I am making rupees 10 per share when it hit my target. Instead of this, what's happening? After I am buying at rupees 50, it started moving down. From 50 it went to rupees 49 and then it went to rupees 45 and suddenly due to some crash the stock price is moving from 50 to 30. Now what will happen? I will be making very big loss because I fixed the target but I haven't fixed any scenario for selling the stock when it started moving down. So now what will happen? I don't know where to book. It keep going down and suddenly it's standing at rupees 30. If I sell at this rupees, I will be making loss of rupees 20, which is very big loss. So to avoid this big loss, stop loss concept is came. By fixing some stop loss, we will be get saving from very big loss. So what can I do now? In this scenario, I am fixing my stop loss at rupees 48. So now what will happen if the stock is started crashing from 50, if suddenly it went to rupees 30? Now what will happen? Since I placed this stop loss, first my stop loss will be executed, then it will come to 30. So I will be getting saved from very big loss of rupees 20 per share. Now my stop loss will be 48. I will be making loss of only rupees 2 per share. That's why we are using this stop loss. So coming back to the session, let's understand what is support and what is resistance and how the support and resistance going to work in our scenarios. So we understand what is support and resistance. Support is nothing but here we are going to fix our stop loss, and resistance, which is nothing but here we are going to fix our target. So let's start with example. For example, take a stock named Aban. Aban is listed in stock market for first time. You can take as example. Aban is listed at rupees 100. Now it's first time coming into the stock market. Now the chart is not made. It started at rupees 100 and slowly it's moving up. So we need to wait for some time. After making some new high, the stock price will come down. Once it come down, it's giving us something called a new high, which is called as our resistance. It made high at rupees 150. So we are making it as a high, or we can make it as resistance. And this is nothing about our low, which is called as support. So it went to rupees 150 and suddenly it came down and it went to rupees 100 back. So now again the stock price is retracing back. Now the current price of stock is rupees 101. So now I am planning for a new trade using this concept support and resistance. So let's see how we can make our trade. So current price of stock is rupees 101. By looking at this chart, you can come to know where is high, where is low. This is nothing but our high and this is nothing but our low. So what you can do, you can make our first trade. The current price of stock is rupees 101. So I am planning to buy this stock. So where I can fix my target? Target is nothing but our resistance. You can see where is the resistance. The resistance of Aban is at rupees 150. So I am fixing my target at rupees 150. So where is our support or where is our stop loss? By looking at this chart, you come to know where is our support. Here you can see 100 is our support. Why we are keeping 100 as support? Because the current price of stock is rupees 101 and we are looking at the low, nearest low. We don't have any low below this 100, hence we can use this 100 as our support. But there is some problem using this 100 as support. This is the actual support, but if we keep 100 as our stop loss, what will happen? This candle will keep on it between this resistance and support. It will keep on touching between these two lines. When it come to hit our resistance, we will be making profit, no issues. But what happen if it repeatedly hitting this low, this support? What will happen? We will be making lot of losses. So to avoid this situation, what we can do, we can keep our stop loss below this support. Always if your support is 100, what you can do, you need to fix your stop loss below this support. So for example, we can fix 90.95 as our stop loss. So now what will happen? If the stock price suddenly hit back to this support, we not make any loss until it break this 100 and it went until it went this 99.95. So we will be safer. Now what's happening? We are making plan 1 based on this scenario. Current price is rupees 101. We are fixing target at rupees 150 by looking at the resistance, and we are fixing our stop loss at rupees 99.95 by looking at our support. So now what's happening? In scenario 1, the stock price is moving up. Slowly it's moving up. And finally what's happening? It's hitting my target. In scenario 1, I am making profits. So in scenario 1, I am buying a stock at rupees 101. I am fixing target at rupees 150 and I am fixing stop loss at rupees 99.95. Now what's happening? My stock price is slowly moving up and finally it's hitting my target. In scenario 1, my target is hitting and I am making profits. If my target hits, my profit will be 150 minus 101 will be rupees 49 per share. This will be my profits. So this is scenario 1. So you are entering each trade with a proper plan. So here everything is well known. You are going with target and stop loss based on support and resistance. So here first you need to write down your risk and reward. If you are entering this trade, your risk will be rupees 1.05 and your reward will be rupees 49 per share. Reward is very high here. So you can enter this trade to risk a very big profits. So this is benefit of using support and resistance to find your target and stop loss. You can gently make a trade with a proper plan by reading a risk and reward. So let's see the scenario 2. In scenario 1, we have seen our target is hitting. It's a happy path, it's working fine. So in scenario 2, what's happening? After I am buying at rupees 101, the stock price is slowly moving down and it's hit the price rupees 100. After hitting at rupees 100, it's retracing back. So this is scenario 2. Now what's happening? The stock price is slowly moved down and it's at rupees 100. Now my stop loss is placed at rupees 99.95, so I will be safer. It's hit at rupees 100 and it's retraced back. Now it's hitting my target. This is scenario 2. In scenario 2 also I am making profits. So in this scenario 2, I am making profit even after the stock is hitting this support. So we fixed our stop loss below this support, hence we are safe. So let's see the scenario 3. In this scenario, I am buying at rupees 101. Now the stock price is slowly moving down and it's suddenly breaking this support and it's went low till 90. Now what's happening? It went to rupees 90, but I placed the order at rupees 99.95. Here I fixed my stop loss, so I will be making loss at rupees 99.95 only. So my loss will be total overall 1.05. I brought at rupees 101 and I sold at rupees 99.95. Hence my loss will be rupees 1.05. This is scenario 3. So we have seen 3 scenarios. One is hitting target, another one is also hitting target, and third scenario is making loss. So till now we have seen lot of scenarios and plan for entering the trade. Here we are buying at rupees 101 with target at rupees 150 and stop loss at rupees 99.95. Now it's hitting our target. We are making profits. Now after hitting this 150, the stock is again retracing back. Now what we should do, we should not miss this chance. We need to make our next trade. The stock is heading towards downwards. So what we can do, we can plan for next trade. With plan 2, what we can do, here I going to explain a new scenario called short covering. Short covering is nothing but like how you will be buying a stock and then you are selling it. Like same, what you can do, first you can sell the stock and then you can buy. For example, take Aban as example. In scenario, what you will do, you will be buying Aban at rupees 50 and you will be selling at rupees 60. You are buying at rupees 50 and you are selling at rupees 60. This is called buying a stock. At same like this, there is something called short covering, which means first you can sell the stock at rupees 50 and then you can buy the same stock at rupees below this price where you have sold. You have sold at rupees 50, now you can buy at rupees 40. This is called short covering. This will be available only for intraday. Most broker will be enabling this. Short covering is nothing but selling the stock and then you can buy. Yet the same scenario I am going to use. Since we are short covering, we need to fix our target and stop loss based on the support and resistance. As you already know where to fix our support and resistance when you are buying the stock, but when you are selling the stock, you need to know where to keep the support and resistance. Since we are selling the stock, the current price of stock is rupees 149. So first we are selling the stock. We are selling at rupees 149. So to make profit, you need to buy the stock below rupees 149. So where you can buy, just to look at this chart. If you look at this chart, you can come to know where the next resistance is. Since you are selling, your resistance will be acting as here. Since we need to buy below this price, so you can fix this as a resistance. So our target will be rupees 100. So where is our stop loss? So if you look at this chart, you can see here this will be acting as our stop loss, this 150. So as we have already seen, we should not keep the support at same price. We should not keep stop loss at support. We need to fix the stop loss below the support. So we need to keep stop loss at rupees 151. So once it breaks and it retraces back above this support line, we will be making loss. So we need to fix our stop loss at rupees 151. This is our trade plan. So we are selling at rupees 149 and we are buying at rupees 100. So if our target hit, we will be getting profit of rupees 49. So if our stop loss hit, we will be losing 1.05 rupees loss. So this is our plan 2. So this is our plan 2. Here also we will be using 3 scenarios as same like earlier we have seen. Either it can hit target or it can hit stop loss or it can hit target after hitting the support line. So this is the support and resistance we are using. So at same like this, again it will retrace back. Again you can buy here and your support and resistance will be getting changed. Here we will be having your support and here you will be having the resistance. So again the stock price will come up, it will go up and it will hit this target. Again it will retrace back and it will come back to the resistance. Again it will retrace back, it will be hitting this side. So this chain will keep on continuing. So until it continue, you will be making profit based on the scenarios. you will be buying and selling based on the support and resistance. So this chain will keep on continuing. So how long it will continue? It won't continue for forever. At sometimes, at some reason, either side is going to break. So what to do if it breaks in either side? We will see all those things now. So until the chain continues, you will be using the opportunity to keep making profits. Now what's happening? At rupees 101, you are buying the stock and fixing target at rupees 150 and fixing stop loss at rupees 99.05. Now what's happening? Due to some bad news or reason, suddenly the stock price is getting fall. So the stock is getting fall and is going below rupees 75. Now what's happened? You need to keep on waiting until it forms a new low. Once it breaks, you need to wait. It will keep on falling. It went 75, then it went 70, and then it went 60. It keep going down. Just you need to keep waiting until it makes a new high. Sorry, until it makes a new low. So it's keep going down. After some time, it went to 60 and then it retraced back. So now we are getting a new low. This will be our new support. If you are buying, it will be your new support, but if you are selling, it will be your new resistance. So it went retraced back. It recovered from rupees 60. Now it's trading at rupees 61. Now what you can do? You should not miss this trade. So again, it retracing back. It's again trading at rupees 99. Now you can make another plan. Now you can make a plan 4, of which the current price of stock is rupees 99. You can sell at rupees 99. Your target will be at rupees 60, which is our support. And your stop loss will be above this 100, which is nothing but 100.05. So based on this plan, you can make another trade. If target hits, you will be making rupees 39 profit. This is what we call as reward. For this plan, our reward is 39 points and risk is as same 1.05. This is our plan 4. Now what will happen? It will come back. And if it hit this target rupees 60, you will be making good profits. And again it will retrace back. From here it will again retrace back. Again you can make another plan. Plan 5 to make a trade buying at rupees 60 and your stop loss will be below this 60 and your target will be at rupees 100. So this chain will keep on continuing. So you can keep trading until this chain continues. For some times this chain will keep on continue. But after some times, again what will happen? It will again break this high. What will happen? You are making a trade at rupees 99 with target as rupees 60. Now what's happening? Suddenly due to some new good news, the stock is breaking ahead of this high. It's breaking another resistance of rupees 100 and it's retracing back. So this chain going to continue for some time. Until this chain breaks, you're going to make profits based on target and stop loss, based on support and resistance. Now what's happening? Again the stock is retracing back. Right now the current price of stock is rupees 99. We are planning to make a trade selling at rupees 99, our stop loss is rupees 100.05 and our target is rupees 60. So we are making this plan, but now what's happening, due to some good news which is coming to the stock, suddenly there is lot of buyers. So what's happening, it's breaking this 100, it's breaking this support and it's moving again. So since we kept stop loss at rupees 100.05, that stop loss is getting it. We are making loss of rupees 4.05. No problem. Let's see what's happening after this chain breaks. So once the chain breaks, we will be knowing what going to happen because we are having the next resistance already available here. So just what we need to do, immediately we need to make our next plan. Once the chain breaks, the current price of stock is rupees 101. So now what we can do, as same like this plan, we are going to buy the stock at rupees 101 with stop loss at rupees 99.95 and target at rupees 150. So this chain will be continuing again. It's going to hit at rupees 150, again this going to retrace back, again this chain will be continuing for some time. So this chain will be continuing. So how long this chain will continue? Until it breaks either side. So if it breaks this side, we are already know what going to happen. We are already having this support, next support as 60. So we are going to trade based on this 60. We are going to trade based on the support and resistance. Once it breaks this 100, we are going to enter selling the stock at rupees 99. We are going to fix stop loss at rupees 100.05 and target at rupees 60, and we are going to make the trade. But what will happen if it breaks this side? Let's see. So what to do? The chain is keep on continuing for some time. It's keep going between this line. But after sometimes what happening? We are making a trade here. We are entering at rupees 149 with target at rupees 100 with stop loss above 150.05. So now what's happening? Due to some good news again, the stock is breaking this support. Now again it's going back. Now what we need to do? We need to wait. Since we don't have any I more than this. So what we need to do? We need to wait. We no need to do anything. Since it make a new I, we need to keep on waiting. After sometimes what will happen? It will move ahead and it will make a new I and then it will come back. So once it make a new I and come back, we need to fix that as a new resistance. Our new I is rupees 180 and this we going to call as a resistance. But if we are selling the here, we're going to enter a trade on sell side. So what we need to do, we need to fix this as a support. So where is our resistance? Our resistance is here at rupees 150. So it will come back, it will hit again at this resistance. So again it will retrace back. Now our support will be here. 150 will be our support and resistance will be 180. So now we are going to enter the trade at rupees 151 and our stop loss will be rupees 149.95 and our target will be rupees 180. So it is going to hit this target. So this new chain going to be continue. Again it will come back. Again it will hit this target. Again it will be come back and again it will hit this chain. This chain will be keep on continuing. So how long it going to continue? It's going to continue until it breaks. So once we are entering here at rupees somewhere around rupees 151, now we are fixing target at rupees 180. Suddenly what's happening, due to some bad news, this is breaking at this line. It's breaking a new support. Now what's happening? We're going to make a trade since we know what's going to happen. We know here we having the support, so we are entering at rupees 149. Our stop loss will be 150.05 and our target will be rupees 100. So it will immediately come back. So again what we need to do, it will retrace back. So what we can do, we can fix our next target and stop loss. This chain going to continue until it breaks. So once it breaks, this chain going to continue again. So this is how we going to trade based on the support and resistance. Simply what we are doing, we are finding the nearest low and high and we are fixing that as a support and resistance. So if the support is already available, we can fix that. If support is not available, we need to wait till it make a new support. So how we can fix the support and resistance, I will tell you in shortcut way. So you can monitor here, there is something called inverse V and V shape. So here you can note, I have kept everywhere as a resistance, which is nothing but our inverse V. This we are keeping as a resistance everywhere. You can see here, I am keeping this as resistance. And you can see this V shaped, we are keeping mostly as this as support. So if you are buying, you will be keeping this as a support. If you are selling, you will be keeping this as a resistance. So you can monitor here V and inverse V shaped, which we are calling as a support and resistance. You can keep monitoring everywhere. So if you are taking any charts, you can keep some stock will keep going up. After some times, it will come back. Until it come back, we don't know where the support, where the resistance. But once it come back, we will be getting the both and I will be touching each other. You can see here both an high and low is getting touching each other, which we are calling as a support and resistance. As same here you can see the stock is touching each other. The stock prices keep going down, but after some point, due to some reason, the stock is moving up. So the low and high is getting touching each other, which we are calling as a support and resistance. See the real-time scenario with example. Let's take TCS as example. What I'm doing, I'm going to plot the points. I'm taking this chart and I'm fixing the highs and lows. You can closely monitor. I am plotting the points based on the low and high is touching together. Stock is moving up and after hitting some high it's coming back. Those points I am marking out. Just to look at these two candles, it's following the resistance perfectly. Once it's touched this high, it's suddenly coming down, coming back. By looking at this only, you can understand the power of this technical analysis, power of the support and resistance. So the current price of stock is rupees 2701. I am seeing my I is 2742 and I am seeing the low is here. Just we can close to this candle. So you can see now what going to happen. Current price of stock is 2701. We can sell this stock with target at rupees 2606 and our stop loss will be above this line 2745. So we can enter this trade at rupees 2701. Our stop loss will be above this 2743 and our stop loss will be 2600. So this is how we're going to work with support and resistance.